What is happening, everyone, and welcome back to Bitcoin Bulletin, the show that keeps you plugged into the pulse of the crypto universe. Are you ready for a rapid-fire update that's going to blow your socks off? Because the markets are absolutely red hot, and we've got exclusive intel that you absolutely cannot afford to miss. The news cycle is spinning faster than ever, and today, we're diving deep into a whirlwind of developments that are reshaping the landscape. Get ready to have your mind blown as we break down the latest trends, the biggest plays, and what it all means for your portfolio. This is the information you've been waiting for, the insights that could define your next move. Don't blink, because you're about to get the unmissable updates that everyone will be talking about. Let's dive in. First up, we're talking about seismic shifts in institutional investment. Think massive inflows, bold projections, and a clear signal that the big players are not just watching, they're all in. We've got the numbers, we've got the analysis, and it points to a future that's brighter and bigger than ever before. Then, get ready for a seismic shift in the digital asset world as we explore the ambitious path of Ethereum. Could it be poised to challenge the king itself? We're looking at how institutional adoption is fueling its rise and why Wall Street might be eyeing ETH as its next core asset. This is the kind of story that could rewrite the history books. And you won't believe who's making a major play in the crypto arena. We're talking about a high-profile endorsement that's sending ripples through the market, positioning a key player for massive adoption momentum. Who's behind this strategic move, and what does it mean for the future? Finally, we're seeing a fascinating evolution in investor behavior. Are people ditching the quick trades for the long game? We're breaking down the latest on-chain activity that shows a significant shift towards holding, signaling a maturing market and a growing belief in long-term value. It's all happening right now, and you need to know. Don't go anywhere. Hit that like button, subscribe, and ring that notification bell so you never miss an update. Let's get into it. The bullish divergence breakout. Prepare for a deep dive into the evolving narrative surrounding Bitcoin's market trajectory, as recent indicators present a complex picture of potential shifts. While prices have been on an upward trend, a critical technical indicator, the 14-month Relative Strength Index, RSI, has begun to show a bearish divergence. This divergence is a classic signal where the price ascends to new highs, but the momentum indicator fails to follow suit, instead printing lower highs. Such a divergence on a longer timeframe like the monthly chart is often interpreted as a sign that the current bull market may be losing steam and could be approaching a potential peak, a development that has the market on high alert. However, the story doesn't end with a single indicator. Institutional participation continues to be a dominant theme, with significant capital flows dictating market sentiment. On major platforms like Coinbase, institutional investors are reportedly controlling over 75% of the Bitcoin trading volume. This overwhelming dominance by large players suggests that their actions have a disproportionate impact on price discovery and market direction. Furthermore, the trend of corporate adoption remains robust, evidenced by the fact that 35 publicly traded companies now hold more than 1,000 BTC each. This accumulation strategy by established entities underscores a growing conviction in Bitcoin's long-term value proposition. The approval and subsequent success of spot Bitcoin exchange-traded funds, ETFs, in the United States have been a major catalyst, attracting over $54 billion in cumulative inflows since their inception. These inflows not only validate Bitcoin as an investable asset class for traditional finance, but also create sustained demand that can support higher price levels. Looking ahead, the anticipation surrounding the 2025 Bitcoin halving event is palpable. Historically, these events, which reduce the rate at which new Bitcoins are created, have preceded significant price rallies due to the constrained supply meeting increasing demand. Analysts at Bitwise Asset Management have put forth an ambitious projection, forecasting a potential Bitcoin price of $1.3 million by 2035, implying a compound annual growth rate of 28.3% over the next decade. This forecast significantly outpaces the historical returns of traditional assets like equities, bonds, and even gold. In the immediate trading landscape, Bitcoin has recently tested support levels below the $110,000 mark, with traders closely watching the 200-day exponential moving average, EMA, around $103,995 as a critical support zone. Should selling pressure increase, this level could become a key battleground. Meanwhile, the RSI has cooled to around 40, approaching what is considered oversold territory, and the stochastic RSI at 27 further hints that the downward momentum might be abating, potentially setting the stage for a rebound. Despite short-term technical signals, the underlying market sentiment, as reflected in large block transactions, suggests that sophisticated investors are preparing for further upward price movements. The increasing popularity of call spreads targeting prices as high as $160,000 and $190,000 for December expirations signals a strong belief in continued price appreciation. This bullish positioning is further bolstered by the macroeconomic environment. With U.S. federal debt escalating to $36.2 trillion, the diminishing purchasing power of the U.S. dollar, which has lost approximately 40% of its value since 2015, reinforces Bitcoin's appeal as a hedge against inflation and a store of value. But is this bullish outlook universally shared, or are there hidden risks investors are overlooking? Next, we'll explore how Ethereum is gearing up to potentially challenge Bitcoin's dominance, fueled by Wall Street's growing interest. Ethereum's ascent, the flippening factor. The cryptocurrency landscape is constantly evolving, and a narrative gaining significant traction is the potential for Ethereum to not only catch up to, but surpass Bitcoin in market capitalization and influence, a phenomenon often dubbed the flippening. This ambitious trajectory is being significantly propelled by increasing institutional adoption and a growing perception within Wall Street that ETH could become a core asset for major financial institutions. The journey of Ethereum towards this potential flippening is multifaceted, encompassing technological upgrades, ecosystem growth, and a strategic positioning that appeals to traditional finance. Unlike Bitcoin, which is primarily viewed as a store of value and a digital gold, Ethereum is increasingly recognized for its utility as a platform for decentralized applications, dApps, smart contracts, and the burgeoning world of decentralized finance, DeFi, and NFTs. This utility-driven demand is creating a different, perhaps more sustainable, growth model. Institutional interest in Ethereum has been on a steady rise, mirroring the trend seen with Bitcoin, but with a distinct focus on its underlying technology and potential for future innovation. The development of Ethereum's Layer 2 scaling solutions, such as Arbitrum and Optimism, has significantly improved transaction speeds and reduced costs, making the network more viable for a wider range of applications and a larger user base. Furthermore, the successful transition to a proof-of-stake (PoS) consensus mechanism through the merge has made Ethereum more energy efficient and scalable, addressing key concerns that previously deterred some institutional investors. The approval of spot Ethereum ETFs, following the precedent set by Bitcoin ETFs, is a critical development anticipated by many in the market. If approved, these ETFs would provide traditional investors with a regulated and accessible way to gain exposure to Ether without directly holding the cryptocurrency. This could unlock a substantial wave of new capital into the Ethereum ecosystem, further solidifying its position as a core digital asset. Wall Street's perspective on Ethereum is shifting. While Bitcoin has been embraced as a digital gold hedge, institutions are increasingly looking at Ethereum as a foundational layer for the future of finance and the digital economy. The network's ability to support complex financial instruments, from stablecoins and lending protocols to tokenized real-world assets, positions it as a critical piece of infrastructure for the decentralized future. Analysts suggest that as regulatory clarity improves and institutional products like ETFs become available, ETH could see inflows comparable to, or even exceeding, those of Bitcoin. This growing institutional embrace is not just about investment, but also about integration. Financial giants are exploring how to leverage the Ethereum blockchain for various purposes, including settlement, tokenization of assets, and creating new financial products. The network effect of Ethereum, with its vast developer community and extensive ecosystem of dApps, further reinforces its appeal. As more developers build on Ethereum and more users engage with its applications, the network's value and demand are expected to increase organically. However, the path to the flippening is not without its challenges. Scalability remains a key area of development, and competition from other blockchains, often referred to as Ethereum killers, poses a constant threat. Regulatory scrutiny, particularly concerning the classification of Ether and staking rewards, could also impact institutional adoption. Despite these hurdles, the momentum behind Ethereum, driven by technological innovation and increasing institutional validation, suggests that the race to the top of the digital asset market is far from over. But what happens when political figures start backing specific digital assets, potentially influencing market sentiment and adoption? We'll be discussing a surprising endorsement that's creating major waves in the crypto space. The trump card: political endorsements and crypto momentum. In a surprising turn of events that has sent shockwaves through the financial and political spheres, a prominent political figure, Donald Trump, has reportedly made significant moves into the cryptocurrency space, signaling a potential paradigm shift in how political endorsements intersect with digital asset adoption. This development has thrust companies like Metaplanet into the spotlight, positioning them as key players in a strategy that appears to be gaining considerable institutional momentum. Metaplanet, a company that has strategically increased its Bitcoin holdings, has found itself at the center of attention following reports of Trump's alleged backing or significant interest. While the specifics of any direct financial involvement remain subject to speculation, the narrative suggests a powerful alignment between political influence and the burgeoning digital asset market. This association is critical because it can dramatically shape public perception and attract a new wave of investors, particularly those who are influenced by prominent political figures. The implications of such a high-profile endorsement are far-reaching. Historically, political figures have had a substantial impact on market trends, whether through policy decisions, public statements, or direct investment. In the context of cryptocurrencies, which are still navigating a complex regulatory landscape and evolving public understanding, a presidential candidate or former president lending their support can legitimize the asset class and accelerate mainstream adoption. This is particularly relevant as the upcoming election cycles often involve discussions about economic policy and technological innovation, where digital assets are increasingly becoming a topic of debate. Metaplanet's strategy of accumulating Bitcoin, coupled with this reported political backing, creates a compelling narrative of institutional adoption momentum. Companies that hold significant amounts of Bitcoin are often viewed as bellwethers for institutional sentiment. When such companies align with influential political figures, it can signal a broader trend of acceptance and integration of digital assets into traditional financial and political frameworks. This can lead to increased demand, potentially driving up prices and encouraging further investment from both retail and institutional players. The market reaction to these developments has been palpable. Shares of companies associated with Bitcoin, including Metaplanet, have seen increased trading volume and price volatility. Analysts are closely watching to see if this political endorsement translates into tangible policy changes or regulatory frameworks that could further benefit the crypto industry. The potential for a more crypto-friendly regulatory environment, should this political alignment translate into policy, could unlock massive growth opportunities. Furthermore, this situation highlights a growing trend where political capital and financial innovation are becoming increasingly intertwined. As digital assets mature, their influence extends beyond purely technological or financial realms into the political arena. The ability of a political figure to sway market sentiment or influence regulatory outcomes makes their stance on cryptocurrencies a critical factor for investors to consider. The strategic positioning of Metaplanet, therefore, becomes not just a financial play, but a narrative that captures the intersection of politics, technology, and finance. The long-term impact of this association will likely depend on various factors, including the actual level of political support, the evolution of regulatory policies, and Metaplanet's continued execution of its Bitcoin accumulation strategy. However, the immediate effect is clear. It has amplified the conversation around Bitcoin and brought a new layer of intrigue to the institutional adoption narrative, suggesting that the political landscape itself is becoming a significant factor in the future of digital assets. But as major players make bold moves, what are everyday investors doing with their digital assets? We're shifting gears to look at the subtle but significant changes in investor behavior on the ground. The investor hold, stability, and long-term bets. In the dynamic world of digital assets, a notable shift in investor behavior is emerging, characterized by a stabilization of activity and a pronounced move towards holding assets rather than engaging in frequent trading. Recent on-chain data reveals a significant trend. Centralized exchanges, CEXs, have recorded a net inflow of 2,600.32 BTC within a 24-hour period, indicating a potential consolidation phase where investors are prioritizing asset accumulation and long-term storage over short-term speculation. This trend of slowing exchange withdrawals and increasing inflows suggests a maturing market sentiment. Several factors contribute to this behavioral evolution. Firstly, there has been a noticeable reduction in speculative trading activity. As market volatility potentially decreases or traders adopt a more cautious stance due to broader macroeconomic uncertainties, the allure of rapid gains through frequent trading diminishes. Consequently, average daily withdrawal volumes have reportedly seen a substantial drop of approximately 35% compared to the previous month. This deceleration in withdrawals can be interpreted as investors becoming less inclined to move their assets off exchanges for immediate selling or trading purposes. The inflows into CEXs, while seemingly counterintuitive to a holding narrative, can be attributed to various factors. It could indicate that investors are returning to exchanges to acquire more assets, perhaps accumulating during periods of price stability or before anticipated upward movements. Alternatively, it might reflect a strategic repositioning by larger holders or institutions who are moving assets onto exchanges for easier management or potential future large-scale transactions. Regardless of the exact motive, the net inflow points to a less frenzied market environment compared to periods of high speculative activity. Further reinforcing the holding narrative is the observed behavior of long-term holders, LTHs. These are investors who have held their digital assets for an extended period, typically over a year. On-chain metrics indicate that LTHs have increased their average holding periods by approximately 10% compared to the previous quarter. This lengthening of holding periods is a strong signal of conviction in the long-term value of Bitcoin. It suggests that these investors are less susceptible to short-term price fluctuations and are committed to their investment thesis, viewing Bitcoin as a strategic asset rather than a speculative trading tool. This shift towards holding aligns with the broader narrative of Bitcoin's increasing adoption as an institutional-grade asset. As more sophisticated investors and corporations allocate capital to Bitcoin, they often adopt a buy-and-hold strategy, recognizing its potential as a store of value and an inflation hedge. The stability observed in Bitcoin's price, often hovering above the $60,000 mark, further encourages this long-term perspective, providing a sense of security for holders. However, the future trajectory of on-chain activity and investor behavior will remain closely tied to macroeconomic factors. Key elements such as interest rate policies set by central banks, global economic stability, and the evolving regulatory landscape for digital assets will continue to play a crucial role. Clarity on these fronts could further solidify the trend towards holding or potentially reignite speculative trading, depending on the outcomes. For now, the data suggests a market where patience and long-term conviction are increasingly taking precedence. So, we've covered institutional surges, political plays, and investor shifts. What's the overall takeaway from this whirlwind of news? Get ready for a super fast recap of all the top stories and your full call to action. All right, that was a massive download of market-moving news. Let's do a lightning round recap. Bitcoin's institutional adoption is booming, with projections hitting $1.3 million by 2035 despite some bearish technical signals. Ethereum is making a serious play for Wall Street's core asset status, potentially challenging Bitcoin's reign. We've also seen a high-profile political endorsement boosting a key crypto player, Metaplanet, signaling major adoption momentum. And finally, investors are increasingly shifting towards holding Bitcoin, showing growing long-term conviction amidst market stabilization. Don't miss out on any of these critical updates. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for more in-depth analysis, and hit the notification bell so you're always the first to know. And tell us in the comments, which of these stories has you most excited? Follow us on all social media platforms for real-time updates and join the conversation. We'll see you in the next one.